Hi, good morning everyone. My name is Ram Damija. Welcome to my channel. Today is 11th of May and Sunday, and we have just got the news that the ceasefire has been declared between India and Pakistan, and the war situation that was there now looks like it is not escalating, and hopefully it should be back to normal pretty soon. So that is very good news for the markets, and the markets hopefully will react tomorrow. We will have to see what the reaction is, but if the peace holds and if there are no further escalation or no further news flow, then my guess is that we are moving towards all-time high, because, and I will tell you the reasons for that as we go along in the video, why I feel that we might have a shot at making at all-time highs. But all indications are now looking positive, and this was one major thing that was weighing on the markets, which was not letting markets go, and markets were just consolidating in a phase. But the strength of the market was such that in spite of such bad news, the market was not falling for all these days. So my sense is that we will see very good days going ahead. We should, because there is no negative trigger, and I will show you what the fundamentals of the markets are indicating and how to navigate the markets going ahead into the next month. So I'm going to take you through all of that in today's video. And another thing is that before I start the video, this is a good time to build your portfolios, and if anyone is interested in making their portfolio or evaluating their mutual fund portfolio, they can contact me through the link given in the description box, because these are such times that if one invests sensibly, then one can actually make a very good and strong portfolio for the long term, because it is during times of uncertainty that you get good prices in the market as well. Because when everything is good, then the prices of stocks, etc., the multiples that are given to them are also high. So in my opinion, it is still a good time to make your portfolio, and if anyone is interested, please fill up the Google form and I shall get back to you. It's of course free of cost. Now coming to today's video and how things are. So this was the tweet that came in yesterday evening by Mr. Trump, stating that there has been ceasefire that has been declared, and I think it was something that the markets were desperately waiting for some news, so that the markets can get back to normalcy and get back to what they do best. Now let us look at how we are placed in our markets. Now this is the Nifty chart, as we see one-day chart, and you can see that the bottom that we made on 7th of April, we have been just going one way, except for the fact that there were two resistances, 23,800 and 24,200, which we needed to cross to ensure that we are moving higher, and we spent a good amount of time at 24,200. So if you see, it's almost been close to a month since we have been at stuck at 24,200, plus minus 100 points up, 100 points down. And over here you can see somewhere around 2nd of May is when we made 24,500 as the top, and after that the markets have been kind of having some sort of a downward pressure, and that can lot of it can be attributed to the uncertainty that was prevailing in the markets. And Thursday, Friday were very tense for the markets, yet the markets did not crack. They went down, so you can see this candle which is down, but they did not crack too much, so which was a good sign, and it was basically indicating that in spite of such bad news, the market was not willing to crack. So that was that shows that the strength in the market that is there. Because if you see, the neighboring country index was down almost 10%, 7%, and so on and so forth in when the escalation was going up, but our markets held very strong. So that shows you how much strength the Indian markets have. And another factor of it, which I'm going to discuss further, was the FII buying. Now during all this tension, except for Friday, FIIs have been continuous buyers. They had been continuous sellers for the last 1 year, and that is where the pressure in the markets had also started to build up. But they have been continuous buyers ever since. Only Friday they sold something, and that could also be related to perhaps the currency movement, etc. So now 24,500, 600 was the last top that we made. I think we should be able to break that pretty soon. Maybe Monday itself we might be able to break that. Some people are already saying 25,000 on Monday, but I don't think so. That might be on the cards, because that will be 4%. But I think there should be a good rally of 2.5% in my opinion, and if everything holds. So 24,600, perhaps we should be able to see somewhere close to those levels on Monday itself. Then the real test will come in at 24,900, which was the previous intermediate top, and then the final top at 26,280. Now some people might be thinking that, oh, 26,000 is very far away. It is not. It is just 7-8% from where we are sitting today. And if we make a good dash towards it, these levels can be achieved in about a month's time also as well. So I won't be surprised if everything is okay. We might see some very big rallies coming in now that all the things are in line. And if you look at where we are in terms of from the highs, this is the indices chart that shows banking, FinNifty, private bank, etc. had already made their all-time highs after the correction. So there was an all-time high that was made in September 24. Then the markets fell, but these indices, they were able to make their all-time high in this particular leg of rally. So these indices are already at an all-time high. After that, they've corrected a bit, but the main thing to see over here is Nifty. So Nifty is down minus 8.64% from the top. It's not a very huge distance. It had gone to minus 16, so half of it has covered. It had gone to actually minus 7 also. Now it is corrected a bit. It's at minus 8.64, so it's not too much, right? After that, midcap is minus 11%. Pharma minus 11%, FMCG minus 16, small cap is at minus 20%. So that again, I don't know whether small cap, the time has come for rally or not, because small cap valuations are still very expensive, whereas Nifty valuations are absolutely fine in line. Nifty next, again, combination more of mid and large caps, is about minus 19.75%. It had also rallied a lot during the last in the last bull run of last 1.5 years. It had almost doubled. So it's corrected about 20%, which is absolutely in line. PSC, IT has been one of the weakest ones, and a lot of reasons for that. One was that US uncertainty. US was getting into there were talks of US getting into a recession. Next was the currency actually strengthening, and the results also coming in single digits, etc. So IT has been a laggard. It has not outperformed for a long time. And as you can see, it is down minus 22% from the top. So let us see how that behaves. PSU Bank, again, it was the leader of the last bull market over here that you see. That has also corrected a lot. So and I have said this before, that leaders of the last bull market will very, very rarely go on to become leaders of the next bull market. So that typically happens. So you can see PSU Bank is also minus 22%. Momentum is minus 25 and Alpha is minus 26. Now momentum is a strange play. What you will see is that when the bull market actually starts, that is when momentum starts to outperform the other indices. And when the bull market is at its peak, then momentum is way off the chart. So then you will see returns in momentum of like 50%, 100% over the last couple of years. So at the peak of the bull run is when momentum is at the highest. And when the market starts to correct, momentum typically falls the most, and that is what we are seeing. It will remain like that till the next bull market starts. It is going to be a laggard, because the cycles of the bull market are typically, they start off with large caps participating. First they recover, the large caps are the first to recover, then they are the ones to lead the rally, and then the mid caps take over, and finally the small caps, micro caps, SMEs. That is the last blowout phase of the bull market, when the entire retail is in the market and everyone wants to come in and everyone throws caution to the wind. Suddenly you will see that large cap performance starts to underperform, and people tend to get into worse and worse quality in their portfolio. So that is the peak of the bull run, and that is what we saw in somewhere in even I would say from March, April 2024 to right up to September. Till September was like absolutely mania, wherein everyone was just buying SMEs and applying in IPOs and whatnot. That is the typical peak of the bull run. and no one can call the top because you just don't know till when that is going to continue. It might continue for 3 months, 6 months, 1 year, and that is the real blowout phase of a bull market rally. So coming back to the point that PSU banks, etc., momentum indices were the leading ones in the last bull run, and till the next bull run comes, especially the momentum names are likely to underperform. So right now, in my understanding, and I have been saying this to my clients for a long time as well, that invest in large caps, invest in quality names. The time to invest in small and mid caps is going to come, but perhaps it might not be right now, though these indices had corrected almost 35. I remember alpha was down almost 35%, momentum was down 33%, and so on and so forth from their peaks. That time we invested some bit into them as well. In fact, we invested quite decently into them, and now they are up almost 15% from the bottom. But will they double from here? I don't think so. Till the time the next bull run comes, people will have to wait for these indices to outperform. So the focus should right now perhaps be on quality, on large caps, and then slowly, as the valuations catch up, because there will be a point in time in another 3 months, 6 months, when small caps earnings will grow, but their valuations will not grow because their prices are not growing. That probably will be a very good time to invest in these names. When the valuations are down, when the earnings are good, and when the cycle is turning, that is the best time. So just to give you an example, March 23 was the perfect time to invest in these kind of companies, small cap segments and so on. And from there we saw how momentum, alpha and small caps outperformed the markets till September 24. So these are cycles that always play out, and it is how you play these cycles will determine the returns on your portfolio. And as I have said before, I specialize in these things in terms of helping clients construct their portfolios and guiding them about these market cycles. And I enjoy interacting with all my clients. A lot of them actually proactively also reach out to me, and we have a good discussion. And there is alpha that we try to create by doing this. So I had said before, if anyone is interested in their mutual fund portfolio, they can contact me through the Google form given below, and I shall be happy to help. Now coming to the next part, which is FIIs. Now you see, this is the FII data for buy and sell. FIIs have been continuously buying. So you can see 2nd May, 5th May, 6th May, 7th May, 8th May, they have been buying. Only on 9th May did they sell. But the month till date number is 7,857 crores, which is almost $1 billion. DIs have bought double of that. So there is no reason for me to believe that this rally is about to end. In my opinion, this rally could be just starting. Now compare it with this numbers. October they sold 1 lakh crores. November they sold 45,000 crores. January they sold 87,000 crores. February they sold 58,000 crores. So this was actually capitulation that was happening. But come March, when we saw the rally, FII stopped selling and the market started rallying. 2,000 crores. April, 2,735 crores. Rally started. So we have been seeing that the moment FIIs have stopped selling, our markets are rejoicing, and now FIIs have started to buy in good quantities. And just imagine if FIIs end up buying like a $10 billion kind of a number in a month, then what is going to happen? Because DIs will have to buy, right? DIs, the inflows are coming through mutual funds, SIPs, etc. So they will be the ones who will be continuing to buy. Retail is not selling. So if FIIs also turn up to be buyers, and there's no new paper also coming in, so all of it is going to go into the secondary market. So we might see a big rally coming in if FIIs continued their buying the way they have been doing. Now the next thing that I would like your attention to be taken to is India VIX. Now India VIX is at a 21.63, which is slightly on the higher side. And whenever India VIX is on a higher side, it indicates that there is some sort of nervousness in the markets, and it had been going up steadily, since the tension started. But now my understanding is that it should go down, and if India VIX goes down, that again will set a stage for a good rally. See, it peaked over here on 7th of April during the day of the tariff announcement, and after that it went down. The markets also went up a bit. Now if India VIX actually cools down, it's going to be good for two things. One is for option sellers, it's going to be very good because the realizations are going to be fantastic. In fact, Friday was a very good day for option sellers. Anyone who sold the options made good money. It is very, very difficult for anyone who doesn't have a system to come and sell options during such days, because there was huge news flow. Market opened gap down, and it was looking like, the situation is going to escalate. So anyone who did not have a system would not have put in the money, and definitely not put in the whole money. So only if you had the systems in place for option selling would you have put in the money, come in, put in the same thing, same orders, and the markets rewarded you handsomely. And that is what I do for a living. I'm an option seller. So my systems are such that that day even I was reluctant that should I do it, should I not do it. But then I said, if you made a system and the system works for you, then might as well follow it. And I came in and pretty much put the entire capital in that, just like what I do every day. And after that there was no need to touch anything, because there was huge decay and it worked out beautifully. So having said that, that is very important to have systems, be it in investing or be it in trading, and that is what is going to make you stand out as a trader or an investor. So coming back to VIX probably should cool down from here, and that is going to be good news. Now let us look at how the international cues are stacked up. This is how it looks like. S&P VIX is at 21.9, which is good. So S&P VIX had gone up a lot and that's come down. It had gone up to 40 odd during the trade war times and so on. So that's come down. US 10 years is under control at 4.38, which is very good news. Nasdaq is fine. Bitcoin is something that you need to keep an eye on, because it has again crossed 100,000. So that basically is indicating that liquidity is starting to build up in the system, which is good. And if Bitcoin is making new all-time highs, then the stock markets can't be far behind. Dollar index is at 100, which is perfect for us. And Brent oil is at 63, which is excellent news for us. USD INR is the only thing that I would like your attention to be over here. So USD INR, we had touched 88, almost 88 at some point in time. This was during February, and from there we have been continuously coming down. So the next high that was made was about 87.4. Then we made a high of 86.6. So this high 85.52 was, I think, made due to these ongoing tensions at the border. Once this is dissolved, then my sense is that US dollar could weaken from here with respect to our currency, and that is going to be really good news for us. Gold is also well behaved. It is not making new all-time highs every day. It is where it was. So that also is a good factor, because I had said in my earlier videos that till the time the gold rally stops, the stock markets are not going to rally much, because gold is also somewhere an indicator of uncertainty, and that was just going up. So gold is also not making new all-time highs. US China trade talks have begun, so that should get settled down. US EU talks are on, and India UK trade agreement is done, which is a big positive. So that reaction is also going to come in through the markets. So all around there's a lot of good news going out. Liquidity has been injected into the system by the Reserve Bank. So I don't see any negative as of now. Of course, there's the unknown that no one knows about. But to me, all indications are looking good as of now. I might be wrong. Markets might surprise all of us, but I would be a buyer. I would. That has been my view consistently. That you should buy at dips, buy when there is uncertainty, and then market will reward you accordingly. So that is my view on the markets. The premiums are good on the options as well because of the higher VIX. So let us see how things play out. Only one small thing is that the open interest is still at 0.76, but we all know how open interests can change within a day. So we will see how the open interest changes and how things move from here. But Monday should be exciting in terms of the market opening. I'm looking forward to it, and I hope all of you are well invested and held your nerve during the uncertain times. Anyone who bought during the uncertain times would be sufficiently rewarded, in my opinion. So that's it from me today. I hope you like this video. If you like my content, please do subscribe to my channel. Please share it with your friends, family, on your WhatsApp group, etc. And I shall see you soon with another update. Till then, be safe, take care, and bye-bye.